Hello, Maverick Traders. Welcome to the Midweek Update. Joe with you here. It's the 3rd of August. Great to be back. These markets have been surprisingly bullish as of late as they come off the bottom here. Guys, I'm going to give you my 2 cents. Let's jump into it. Let's get ready to share some trades and talk about it. Take responsibility for the outcome. You guys know how this works. So, there's a really nice established uptrend from June lows. I'm going to jump into a weekly chart when we get live, so somebody remind me, because it still looks like a pretty aggressive bear rally on that. But we are at a pretty solid resistance area in the markets that was set basically the beginning of May. So June was pretty tumultuous, to say the least. I mean, we came from a pretty stable area, fell apart, set a low, and then we've been climbing back ever since. And it came back pretty quickly. Rob made mention of this on Sunday's Trading Room as well. So we're at this key pivot point on the weekly chart. We've set higher highs and higher lows on the daily chart, above moving averages and all that. But the overall trend, the longer term slow play could have a little bit of hiccups in there. So inflationary data is causing less reaction in the markets. We've seen that for a while now. I truly believe we got scared with that last CPI. Optimistic on the sentiment side of things, signs of bottom fishing. I'm seeing opportunistic trading for sure. I said that last week as well. Some of these things coming off the bottom or had been beaten down, and you get an investor to get to a point to where they'll say, that's enough. That's fine. Even if it goes another 10-15% down from here, I don't care. I got to buy this because it's something I want to hold for 3, 4, 5 years, or I got to build up my portfolio, so on and so forth. So the Fed did raise by 0.75. Hilarious once again, folks. I was on vacation. I said, whoa, look at that. It was a surprise rate hike. And I looked down on my phone. I'm like, no, it was scheduled. It was scheduled. See, when I go on vacation, I detach myself. But anyways, it was in line. And the markets took it in stride. Now, it wasn't until I actually came home, or I should say, watched the Sunday Trading Room that Rob said Powell came out and referenced easing. That soft landing they were looking for, the aggressiveness that the Fed wants to be, and they are going to curb this thing, and they're going to, if it's the last thing they do, if they do see things subside, if they see these numbers get cool, they will cool as well. And he hinted to that. And I really think the markets just took off pretty much after that. As also earnings. Some earnings were met with really optimistic movement, even though they didn't do very well. A couple missed. A couple said they're going to project lower, so on and so forth. But nothing was really punished. Now we're on our way out of earnings, I believe. I believe we got, and when it goes out pretty hard. So we got a bunch coming up this week and into next, but then it'll just taper off. So we'll see where we go from there. So that's kind of what we got as far as the recap. We're stalled out. We'll get to the chart here in a minute, but there are some trade ideas. I do like the biotech sectors, the XBI and IBB. They're both ETFs. I believe I'm going to show you one of them. Don't know which, but they're coming off the bottom. Nice little low base with a breakout to the upside today. Pep Boys, Win, Bumble, all still looking pretty good. Now Google, I have it on the sideways, but it could be argued that it could be a pushing up against its resistance. So if you have the idea that we're probably going to pull back a little bit, and that's kind of my shorter term outlook, and the markets were a little extended, then Google might be something to play at its resistance, maybe even fading it to the downside in the shorter term. So I kept that as a sideways trade. XPEV, once again, the Chinese automakers were leading the way. They kicked some serious butt over the last little bit, and now they're just getting smashed. So we'll take a look at that. Rio and AT&T is just all over the board. AT&T is bearish, but it might also be a pretty decent sideways play. So let's jump into it. I have Win here, and what I like is just this basing action. I think it's really cool because when you get these sideways moves in this area, right, I should get a different color pin, and then it just kind of channel breaks up, but it's come off of a pretty decent little, what do you want to call that, like a head and shoulders, or at least an equal bottom, breaks above resistance here, and now it could threaten this 70 level that it set early June. So I like it. It's in a decent sector, consumer cyclical. If we indeed have a consumer that's not going to slow down, they're in the middle of their season, so we'll see where it goes. But I did like that to the upside. Moving on, let's take a look at Bumble. I'm going to change my pin color because pink is just too close to what I'm drawn with. Today's action is what really raised my eyebrow on it. I like how this had hit the 20-day moving average over the last couple pullbacks. But the gap down today, and I wasn't sure if this is any sort of news or anything like that, but the gap down and it's moved higher. So it has this nice little pullback. It's done it a couple of times. This thing likes to pull back and move higher. I'm not going to target 40 bucks, but a revisit to 38 in the shorter term. So this would be great for a diagonal spread, maybe a vertical spread for you guys that want to play it a little longer. I'm not sure what the expiration cycles are on this, but I'll definitely take a look at it as probably a diagonal spread, maybe a 38 target, maybe a 36, 38, depending on the strike prices. I'll have to dig through that, but I do like that trade as well. Let's get into the biotechs. I chose IBB, it looks like. Now, the other one is a little cheaper, I think less expensive, but it's got a very similar pattern. And I like the kind of the channel breakout here that it had. I could actually bring it all the way from back here if I wanted to. But it's a nice little pop up. I'm not sure if it's, associated with some sort of a news or something in its sector, but I don't care. It's up quite a bit. Maybe it's a little extended. Kind of afraid that it might not make this 135 all at once. That would be my extended target. However, pretty confident and comfortable that it's going to stay. Let's call it above this. What do you guys want to call that? 126, 127-ish. So, calendar spread, diagonal spread, butterfly, targeted, maybe a 125, 130, 135 butterfly spread here. Don't shoot for the extended target of 135, but something midpoint. But I just like it. The sector seems to be pretty strong. Let's get to our sideways trade, or goog trade. Also, folks, if you have this as a bull, I don't blame you. It makes total sense. I'm looking at this range. It's been a wide range bound. I do believe it's been on our sideways watch list a few times. I do like the bounce that it had at the end of July there. It just really nice shoot to the upside, just like the rest of the tech sector did. Now it's up against resistance, pretty much like the Q's charts are. So if you believe that these are going to fade a little bit or hit some sort of resistance at these areas, then yeah, something sideways to down, range bound between the 105, 120. It's funny because I believe I said those exact same strike prices last week, 2 weeks ago. Who knows? But I still like it. Now, if you think that that's it and we're good and the markets are going to continue to consolidate, I would wait maybe to see if it pulls back to this area, maybe the moving averages, and establishes some sort of a doji candle and then starts to work its way back up. If we get this, something like that, then yeah, I'm going to have to flip-flop this thing from sideways to straight up bullish. But that's neither here nor there. And that could take 2 or 3 days. So if you guys want to do something sideways over the rest of this week or next, might be a pretty cool opportunity. Something fun. Let's take a look at XPEV as we move into the bears. I like this because it just slipped today. We had that same consolidation. It looks like it was trying to hold on to the 24 mark. Big push and pull day yesterday. I'm just going off of the range of the candle, its volatility, just based on the shadows. And today it looks like it's slipping. So is it going to drop like a rock down to 20? I don't know. I'd rather have it not, because this could be a nice slow play to the downside if these markets are going to hit resistance and stay at resistance where they're at now, or slightly pull back. The markets are due for a pullback regardless of how bullish they are. So this might be a nice one to be in. It's the Chinese manufacturing, the auto manufacturer. We were talking about these back in here, saying, man, these things are just going gangbusters. And easy come, easy go, I guess, right? Weird. So let's move on to the next. This is Rio. I like this as a consolidation pattern below the 60. I do want to see it break below the 20-day moving average before I got too directionally bearish on it. It is a bear. I do like to see these levels. You can see how this has climbed, respects this level. Here's the first one. Falls apart, comes back. It's respecting this level. We'll see. Now, I don't know if it might play through here, but a slow bleed towards the 55 might be something to look at. It's in a decent sector when it comes to inherent weakness overall. So I'm okay with a sideways to down trade, calendar spread, diagonal, or maybe a butterfly. So something to look at. Now here's one that I just kind of scratched my head at, but I figured I got to look at this. This is AT&T. This thing's been all over the place. It was outperforming for a while. It was doing pretty strong. This and T-Mobile, and then I guess something came out, something bad news, and it's really creating some sort of fun area here. So you could see that it had this gap previously at the end of April, probably its earnings as well. Stayed above that $19 level a couple of times, and then just right back down to it. Now it hasn't fallen back down to the levels that we saw back here in March and April. It's kind of holding on to about that 1850 mark. So sideways, you could probably establish some sort of a range here, or if you think that it's really going to float lower, it could drift down to that 18. Now that's not too much dollar-wise, but sideways to down might work. Or it's again like a targeted butterfly, maybe 19, 18, 17 targeted butterfly, put butterfly to the downside for a week, week and a half. So pretty cool stuff. Anyways, I just thought it was an interesting chart, and I hadn't looked at it for a while. So something to think about, something to look at. Let's get into the overall market analysis. And we are definitely in a bullish move. You guys can see here today, and this is from Monday to Wednesday, folks, and this does change pretty drastic. It's a pretty hard class to pull numbers from, but you can see that the diamonds and the SPY have recovered the majority of the losses yesterday and a little bit of a hiccup on Monday. The Qs surpassed that, and I truly believe that that's kind of the leader because this is the sector that's beat down the most. Some of those high flyer stocks, a lot of the tech stuff's been abandoned, but I'm seeing money put back into it. And to echo what Rob said on Sunday's class, even with bad news, some of these companies are being purchased. So opportunistic buying, lots of it. The Russell actually is up a little bit since this week. U.S. Oil and gold both sliding a little bit further. So it's what you would expect to see when it comes to a market that's kind of surging and trying to stay up at these levels. So let's get into the chart itself. Nice crossover with the 20 and the 50. Right back up to a cluster consolidation. I'm going to call it that, right? This is back up to a pretty serious area that was important. We talked about 420, folks, and it seemed like a long time ago because it was. It was early spring that we were talking about the 420 support level. We did have a really good move up away from it with a crossover as well. So we have seen corrective action like this before. Let me just go ahead and maybe we're getting something very similar, right? Well, that's the pessimist in me. However, let's just play the markets in front of us and realize that we are now back up to a pretty strong level. That 410, 420 area is pretty significant. I have to echo what Corey said yesterday, or agree with what Corey said, that I think that we're going to kind of find a range somewhere around there, maybe a little bit below. I would like to see a pullback to the 400 with an established pivot point, something like this, right? Maybe even like this. Then I will be seriously thinking to flip my switch to the bull side. Right now, I think we hesitate. I think we fade, being a little bit pessimistic in the shorter term. Something a little bit sideways to bearish makes total sense. All right, guys, so I did the majority of the analysis on the SPY. We'll just briefly talk about the diamonds here and the Qs. The same idea. It's up to its resistance. Got the crossover. Good volume yesterday, but boy, today's reaction or compensation of that move to the downside's been pretty decent. I mean, these markets are flat now. I was expecting a negative week. It's not over yet. We still have a couple of days, but they're holding in there pretty good. Jumping over to the Qs, which has been the leader, just does not want to come down. A lot of it has to do with 2 or 3 stocks that people are getting into. I think Meta came out with something today. Aren't they offering bonds? Facebook? Anyways, so there's all sorts of reasons to get into those giants, and we've seen a lot of money flow into it. Amazon was a surprise. They didn't do well, and they got bought up. So what do? There's still money out there. This is actually pushing above those that March support level. Let me draw that line from here, folks. You can see we're actually flirting with it. We're comfortably above some of these levels. So it's outperforming. We'll see how long that takes. Now, economic-wise, it's gonna be pretty interesting. So let's take a look at it. There was a lot here, so I had to kind of squeeze it in. Manufacturing a little higher. Construction spending going the correct direction based on a housing boom, based on the tail end of the summer. Job openings a little lower. Quits in line. The quits makes me laugh. So you guys can read them. I don't have to read them out loud. You can see them all here. The S&P U.S. Services PMI and ISM Services indexes, both a little hotter than expected, but didn't have any sort of reaction to these markets at all. I truly believe what we're going to be focusing on, let's move forward here, is the non-farm payroll. I think might create a little bit of a Fed eyebrow lift, depending on how far off that number is. It's going to have to be pretty decent for them to, or pretty far off for them to not take action but make mention. And you'll know how far off it is. What I love about this, folks, is the markets will react to it. So if it's at 258 and the expectations are 258, it's still lower, so it's negative, it's bad. But if it's at 300 or 265, I think we rally off of it. I do. I think that actually creates bullishness. I think the markets are actually ready to continue moving higher. Personally, right? There it is. All right, let's pull the class before I get any deeper into it. Real quick, guys, I got to find out where the poll is. There it is. Let's go ahead and launch this thing. Did I launch this yet? There it is. Okay. So I'm going to bring this over here, guys. You can see that this is the poll that's open. And you can watch it real time for my traders that aren't live in this class. So it's been a pretty easy market to trade. I don't say that often. Well, maybe I said that because I was on vacation over the last week. But what it is if you're just following along, breaking resistance, pulling back, establishing a pivot, moving higher, and not doing anything too aggressive, nothing too like call ratio back spreads or anything like that, unless you're doing it over earnings, because some of those did jump. This has been a nice, slow, steady climb to the upside. I've got a lot of traders that do ETFs, the SPY specifically, and it has been nice and steady. So trading along the correct direction has worked, and it's very difficult to do personally. So, especially if you have a personal outlook that doesn't really correlate with the current market movement. Also, taking a look at that weekly chart, I'll get there in a minute. It's still ominous, but I just don't see anything out there that the markets are afraid of anymore. Knock on wood. That means unforeseen. Corey says that a lot. It's the known or the known unknown, or the unknown unknown, right? He's got a better way of explaining it. All right, guys, you can see the poll has completely just kind of settled out there. I'm going to go ahead and close it, and I'm going to share it with you guys. And as you can see, we are pretty much a +1. And that makes total sense to me. Thanks for all of that. Let me go and hide this poll for my live class. There we go. And I'll show you my hand, which is exactly yours. I'm a 0 for the week, and the reason why I'm a 0 for the week is just because we're overextended. Yeah, we're just overextended, but I am definitely a +1 on the monthly outlook. Now, my monthly outlook would have been +2 if we weren't extended. But since we're up at that resistance, I had to knock it down to a +1 for the monthly outlook because my weekly outlook is not +1 anymore. It's flat. But I'm green across the board there, above the moving average. The slopes are right, and the crosses are right. The 20 is now above the 50. So I'm sideways to up, just like you. Let's get into the sector analysis. As you could tell, it's probably going to be exactly what you thought. First of all, let's zoom in on this bad boy and see that everything is up. Healthcare is struggling a little bit. Energy is to the downside, only slight, and that's just because of what you'd expect. When the markets have a surge, everything's being purchased. Any sort of defensive stock that was purchased up to that point is going to have some sort of corrective move. So what's the big winner? Surprisingly, it's technology. And the biggest loser is energy. So let's take a look at both. This looks just like the Qs. It should. It's pretty much the exact same thing. I don't have to get too deep into it. But it looks nice. Also a chart that can be purchased, folks. We can actually buy this, right? Buy and sell it. Let's go to energy. And this looks like it's just rolling over, taking a break. it does have a little bit more of a bearish look to it because it is hitting its falling 50-day moving average, and but it is above that 20-day, which is also rising. So if it holds on here or comes back and establishes a pivot point on the rising 20-day moving average below it, it becomes less bearish. At least in my mind, this is going to be more of a sideways deal. However, it does have a lot to give up, so I imagine it might sell off a little bit longer, especially if these markets consolidate at these levels. So let's do a quick conclusion. Strong move from June lows with active buying in some beat down sectors and stocks. There are bottom fishing going on. Opportunistic and confident is what I'm going to put the sentiment on. Or they just don't care. Rob talks about this a lot. When the markets start just to ignore stuff, it's like, you know what, I'm fine. I've taken a loss. I'm out. Let's go ahead and throw some money at work. That usually establishes that the lows were already set some time ago, and I'm referring to June. Now that I've said that, if anything unexpected happens, then yeah, that gets thrown out the window. So are we in a recession? That's the fun conversation. I was on vacation and I was discussing the economy with a bunch of people that don't do any of this, right? They're way off they do their own things as far as professions go. And there wasn't an argument, but the conversation was, yeah, I mean, a true recession is one you feel. The recession on piece of paper is 2 consecutive quarters of negative growth. Rob came out on Sunday and actually gave me a little bit of an education. And that's not true. It actually goes off of this report. Whatever it is. I truly feel that a recession hits whenever you are budgeting. Whenever you find that you can't afford something or you can't do something, or you are personally contracting. That's when a recession matters, right? So our earnings are going to be finishing up, mostly buying regardless of news. Whether or not there's a recession, there's a lot of consumer out there that aren't feeling it, but there sure as heck are investors out there that do not care about it. Whether it's on us, whether it's past, whether it's happening, these markets are moving a little higher. Okay, I think we've got enough of that. So let's go out into the markets and take a look at some of the trades you're looking at. I'm going to go ahead and start first, though, with that weekly chart, because I just thought it was pretty interesting. So let me get off my pen. I'll jump over here and let's talk about the SPY. And I'm going to bump over to weekly and take a look at this bad boy. So technically, it's just a very nice run back up to a descending moving average. Now it's equal to, and I truly believe that's why, let me zoom in a little bit here. That's why I think that that 420, 410 area is your push-pull area. It is pretty significant. Let me draw some lines here. Or 430 is up this way, but the 420, 410, I think these are going to be the two areas that are going to matter in the short term. If it can consolidate here, and it is above that 20-day, so it's looking pretty good, but let me start this over. Erase these. I'm just trying to say where are we at as far as the previous weeks where we were at or above that 410, and we're right on them. So it's technically still a resistance. This is technically still a downtrend. We're just on the upside of our range. If you guys had the Bollinger Bands on this, it would be showing a pretty bearish signal at this point. Right? There you go. There's the counterpoint. So we got the point counterpoint. But in the shorter term, folks, best to err to the bull side. All right, let's jump into some trades here. Brian's going to start us off with Bank of America. Or, I'm sorry, Bank of America. Boeing. Yeah, see, I'm still on vacation. Let's take a look at this. Looking at a August 12th, 165, 175 bull call spread. I love the gap. And yeah, the range makes total sense. Let's draw that out. This is cool. It's cool to see this. A little bit of a hesitation or pullback, maybe some profit taking. But your target's the 175. So let's go up a little bit higher. So there's the 170 where it gapped up to. It's pulled back. It's almost at your lower strike price of 165. Just slightly lower than it. Let me get these lines right. And a target of 175. I'm okay with that. Let me go all the way back here. Yeah, there's a argument to be made about the 172, 175 area for sure. Okay. I like it. Vertical spreads are nice. You don't have to worry about them. You just throw them out there and they kind of do what they do. And you have, one more time, let me read it, the 12th of August. That should be, is that expiration cycle? No, that's week 2 of August expiration. August expiration is the 19th. So a week and a half from now. Nice, Brian. Very nice. I like it. Let me put it down. Not Bank of America. Boeing. All right, let's move on. Wow, we do not have very many at all. Let's look at Qualcomm for Justin. There's a 150, 155 bull call spread. That's what we're looking for here for the 19th of August, which is its expiration. Ooh, I like the way it's moving. 150, 155. Excellent. Excellent. It's great. With the continuation in the moves that we're seeing in the Qs and the NASDAQ and all the tech stuff, this should be finishing the 160, 165 level, right? If we continue to go up the way that we have been. And I love the fact that you're only shooting for just a chunk of change here. It's a nice one. Thanks. All right. Cool. Moving on. All right. Oh, Dan just jumped in with one. Oh, here comes some others. We got CL. Sideways to down. August. 80, 78, 76. Put butterfly. Let me zoom in first. Right. Let's take a look at this. 80, 78, 76. 78, 80. Targeted butterfly. Back to the mean. I like it. Really neat. Okay, so here's the target, folks. Right there, the 78 mark. And this has a range. There's a lower range here. I'm making kind of a sloppy range there. But I like how this has blown through this before. And look at the moving averages. It's just fading it back to the moving averages. Cool trade. I'm going to put it down sideways because it is a sideways to down because it's a targeted butterfly. I like it. See? Get creative. Thanks, Dan. All right. Ronald's got TNA. Call spread, the 19th of August. He's thinking of, okay, let me zoom in first. And then we'll get to, okay. Sure. Bull call spread until the 19th of August. Any specific strike prices on that, Ronald, or just you're thinking of one? Because you could do a few. You got a reverse. You got a situation here. That's 45, 47 and a half target. You got a target up at 50 if you'd like. It's already kind of popped out above the 40. You might get a little bit of a sideways or a pullback first, but I'd be fine with any of those. Yeah, any of those. You know, you could. Let's see, we got a 40. If there's a 42 and a half, let me erase this and start over for fun. If there's like a 42 and a half, right around there-ish, and maybe sell that 47 diagonal. Sometimes those are fun, right? Good old diagonal spreads. That might be kind of cool because that way, if it kind of fades on you first before it moves higher, you're still okay because you'll grab this credit here. So diagonal might work on that, but I'm okay with either one. Let me put it down on the bull watch. Thanks for sharing. All right, Sebastian, got ourselves, is that GameStop? It's got to be GameStop, right? I got in this week for 37 target, but discern potential. Oh. Oh, cool. Okay. Let's zoom in. Higher potential. 37 target, so he played this already, and it does have a higher potential, doesn't it? This has got a very tradable pattern. Look at this little swoop, then a pop, pull back, and this little bit of a, it takes a little bit of momentum, doesn't it? It takes a little time to get going. 37, yeah, it's exceeded that already. I imagine a revisit to 40 makes total sense. But where it's at right now, for sure, 35 to 40, somewhere in between there. If you got the 37, 40, totally fine. It seemed to have a little bit of a hiccup through here, but not much. Not much. So I'm cool with that. Let me put it down. Very nice. All right. Anything else? Go ahead and type it in. I didn't think it was going to be too long of a class today. Oh, here's something popped up. And the reason being is because you're doing great. I mean, we've got our traders out there that are plus ones, and they're buying stuff, and it's going higher. There's really not much to mess around with, right? Would you touch Uber with a 10-foot pole? All right, Dan, let's take a look at it. I always love it when you start something out like that. No. Nope. No. And that's awesome. Is that its earnings here? Yeah. So it's its earnings. This is the speculation that I'm seeing, though. I don't even know what the earnings were. They could have sucked for all I know. But there are a lot of people interested to put money back into these markets. And when you take a look at what Uber did, let me zoom back out. There's traders that remember this. A $60 stock. So you can get it here at $20. Now it's at 30. That's still 50% discount. And that's how the longer term trader thinks. I have something a little bit more realistic, meaning back here in 2021 was a different time. Moving forward, that could completely change. Or I could be wrong. Maybe the demand for Uber quadruples. So I don't know. But long story short, no, it's a fun one to look at. Very difficult to trade. If you wanted to go into something, and I don't suggest it, you get in and try to day trade it with stock. But hey, careful. That's tough. Okay, fun. All right. So we'll end it at that, and I will cut you guys loose. Let me go back and type in these trades. As you guys take a look at this market, that just is happy, isn't it? It's just a good bull move that doesn't seem to want to go down anytime soon. Let's see. Which is probably why we found more bulls than anything. It was funny. I was talking with Corey the other day, and he said that there was a lot more bearish trades out there, but he was a little reluctant to take them. I think he said that on his update as well yesterday. So we got 4 bulls in a neutral or sideways. Actually, it's sideways to down. Let's go ahead and share this with you guys. And I'll get my pin out. Yeah, Colgate was a targeted butterfly to the downside. Yep. Liked it. I liked all those trades. Right, folks. Well, it's good to be back. Class is short and sweet today, but sometimes that's all it takes. Take a look at these trades, and all right. If you need anything, you know how to get a hold of us, and we'll talk to you next time. Bye, everyone.